Running a company is kind of like raising a family, right? You're not going to hand over the reins of raising your kids to some third party for the most part. You're going to stay involved. You're going to give them a lot of love, but a lot of tough love. You're always going to redirect them. At some point, you got to clip their wings when they're, out of elementary school and give them some independence, even though they're probably stupid about what decisions they're going to make, but you let them make stupid decisions and make mistakes.
The Digital Banking Podcast is powered by Typhon. Typhon is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic, revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh Dittar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
Your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? Outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve. It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers? So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks.
Welcome to another episode of the Digital Banking Podcast. My guest today is Andrew Sagliaca, Vice Chairman, CEO, and President of Esquire Financial Holdings, Inc. and Esquire Bank. All right, am I allowed to say this? I think with my guest today, at least about him, I can. Sometimes people fit the stereotype. As someone from the West Coast, I guess I have a personality in mind when I think of a New Yorker from an Italian immigrant family. Intense, brutally honest, deeply passionate, hardworking, and most of all, focused on family. And Andrew fits that to a T, if you ask me. He says if you have your faith, your health, and your family, and then focus on the company with a strong work ethic, you're going to be doing great things. So here's the funny part. Then if you ask me, Andrew bucks a different stereotype completely. Career banker. Andrew is an absolute ball of laughs. He takes his family and what he does very seriously, but he tries not to take himself too seriously. Heck, he even asked me if he could get one of my flat bill hats. He also doesn't want to just do the same thing the banking industry has always done and do it in the same way. He wants to do something unique and serve niche segments with niche services and products. You see, his grandfather came to the US without even the ability to speak English. His family then became successful in real estate due to those core values I mentioned earlier. But when Andrew wanted to get into the family business, his dad said, nope, after 7 kids, I'm tired, I'm over it, go find a new industry. And as luck would have it, Andrew was brought to us into the financial services industry through some work at KPMG. Having been through the mortgage crisis and the growth and successful sale of a bank that grew from just over 1.5 billion in assets to over 60 billion in assets through both organic and M&A activities, he can honestly say you learn more through the hard times than the easy ones. That upbringing and life experience pushes Andrew to always be more and to do more. And this desire to support family and community around him, to work hard, to do something different, to give it all you have, and to have fun while you're doing it, makes Andrew somebody you're going to want to stick around and listen to today. So, Andrew, thank you so much for joining me on the podcast.
Josh, thank you for having me, and we appreciate you taking time out of your busy schedule to spend time with us.
I mean, I think yours absolutely takes the cake over mine, but but thanks for the sentiment. No, I always think it's really cool, through the years that we've been doing this podcast and over 100 episodes, there's lots of different ways that kind of guests find their way to the show, from people that just I know through, my network in the industry to, folks that I run into, or maybe I see someone else speaking or on a different podcast. And then, sometimes we have connections to our PR firms and things like that. And you always get this just wide range of opportunities to talk to people that you may not have had, the ability to have networked with. And Andrew, I think you're definitely one of those folks, right? But when we got connected, I mean, it was like 2 minutes in where I was like, yeah, no, we're done with this discovery call. Like, I need to have Andrew on the podcast. We're going to have a ton of fun. And it was, I think, for two big reasons, right? I mean, I very quickly picked up on your personality of just, there's no BS. You're going to give it to me straight the way it is, whether I like it or not. And I think one of the things that our industry, like any industry, right, is in a time of needing to do is some of that harsh self-reflection of, are we doing the right things to set ourselves up for the next kind of generation of success? But then too, I really enjoyed kind of that conversation with you about, how then you at the bank are approaching doing some things different. So I think that would be something that I'd really love to kind of start with, is maybe tell us a little bit about the bank. And I don't know if you want to, give us the whole, met us at the park bench life story. I think I kind of like that, the whole genesis from start to finish. But yeah, tell us a little bit about the bank.
Sure. I call it the elevator speech. I'll give you the elevator speech. And I like to do it from the end to the beginning, maybe we go all the way back to the beginning. So fast forward to today. We've been around 17 full years. We're in our 18th year. And the bank it's pretty simple. We are a nationwide, branchless, tech-enabled bank that focuses on two unique national verticals or niches. Unique niche, I don't care what word we use. One is a litigation vertical, which is about $500 billion a year that settles through the banking industry. But bankers do not, including myself, when I was a traditional banker 17 years ago, bankers do not truly understand that vertical and their needs. And the second one is a payments vertical. And payments meaning debit and credit card processing. We all have debit and credit cards in our wallet or in our pocketbook, depending on who we are. We all swipe for payments, both at home and in the stores. And at the end of the day, that's arguably $10+ trillion processing through all the card brands and people like PayPal. Well over 10 million small businesses that are traditionally called merchants. And that's underserved because there's only about 125 banks out of about 4,000 that are merchant acquiring banks. So on the litigation side, it's pretty simple. When I say underserved, these are primarily not only contingent fee plaintiff law firms that have very long duration inventories. Unfortunately, those inventories are claimants. They're people with injuries. They're usually 2 to 3 years in duration, which basically means that they have very erratic cash flows month to month, quarter to quarter, a lot of times year to year. And that becomes a vertical that's hard to lend in and lend into because of that erratic cash flow. So it really is simple, though. It's commercial banking, cash flow banking coupled with non-traditional asset-based underwriting. Put the two together, and with any industry, if you can lend into it, you are in the right to attract those low-cost core deposits that in this industry turn out to be, almost $2 in deposits for every dollar you advance on a loan. So it's banking on its head. In the payment industry, it's even simpler. Somebody has to clear all these payments for the end merchant or small business. We are not an issuing bank. We're not the ones. You don't have an Esquire Bank credit card or an Esquire Bank debit card unless you're a customer. In your wallet, you have a Bank of America, American Express, Citi, Chase. Someone has to clear for all those banks. And again, there's or all those small businesses or merchants. And again, there's about 125 banks out of 4,000. So one's balance sheet intensive, loans and deposits. The other is payment intensive, non-balance sheet intensive, fee income.
This is why I think it'd be interesting to go back to the Genesis story part of this too, because as an outsider looking in, I mean, it literally feels like a couple of, friends sitting around in the garage, having beers on a Friday evening or something, throwing darts at a dartboard. And they're like, those are the two things we hit. Let's start a bank doing those two things. So how did you get here?
Sure. The founders of the bank, when I was at my previous bank, before we sold it in an M&A transaction, the founders of the bank were in the litigation industry in a different way, but they were in it. They were in it for almost 10 years prior to founding the bank, just shy of 10 years. And they realized that it was a very underserved industry from the banking industry, although it was very deposit-rich industry with low-cost core deposits. The solution was pretty easy. How do we solve for that? We can't start another finance company, which is what they had, a finance company, where they were really lending to the consumer or the plaintiff, but they were doing that through the law firm. So their relationships were with the law firms relationships were with the consumers. So they built their business model with the law firms, one law firm at a time. Those created great relationships around the country. And the solution wasn't another finance company. The solution was, hey, let's start a bank because we need banking powers, a charter, and we need FDIC insurance at a minimum to go out into this industry and make them comfortable and earn their trust over time that we'd be the right institution for them. The payment industry was a little different. That came along about 5, 6, 7 years later. We had always talked about diversifying, let's call it revenue streams, and having a lot more fee income. And rather than service charging real great core customers and nickel and diming them on deposit accounts and $15 minimums and wire charges and all that, well, if the customers, the core commercial customers are really good customers and their depository relationship is highly valuable, then why the hell do you want to nickel and dime them on fees? Doesn't make any sense. So the payment vertical came out of the thought that we should be within the payment vertical, but how to be within it. And as luck would have it, as most things in life, luck and skill combined get you there. We ran into a gentleman through a commercial customer who started a payment platform at another bank and was leaving that bank and wanted to start a new career. And that genesis, which did come from a commercial lending customer, it did come from a thought of we should be in the payment vertical. That genesis wound us up in the merchant acquiring vertical with him and small number of business partners on his side. And we built that from scratch about 7 years later. The interesting thing is, and I'll do this once, when you combine a balance sheet intensive national model that's for an underserved community, that being litigation, and your net interest margins can be really strong because it is a very stable, low cost depository base. And you couple that with a good fee income business and then match it off with a branchless presence and a technology-enabled platform, you do get the benefit of, I don't want to say it, I'll knock on wood when I say it, you get the benefit of a very high-performing institution where, our margin is 6, our fee income is 20%, our efficiency ratio is below 50, our returns on assets are 260. Our returns on equity are 20%. We do trade at a high multiple in the public markets. And it's the benefit of, smart founders, really good management and employees, great clients and, and a dedication to doing it right and doing it differently than the way I was brought up in the banking industry with brick and mortar, and doing it more with a national focus, which is highly unusual for a small community bank, because technically that's what we are, and coupling it with technology.
So you got all these smart people around. Like, how did you end up there then?
Exactly.
No, but
you know what the answer is? You know what the answer is, Josh? Because my dad said he doesn't want me in the real estate industry, and he doesn't want to trade me. That's the answer. You already said it.
That's the answer. Yeah. No, you were telling me though, it was kind of funny that you were saying, you kind of had to look at this opportunity with this bank when you were talking to the founders. You were talking about how, your oldest was, I think, 13 at the time, right? And you're like, well, I got 5 years. And it's kind of the perfect window of opportunity for me to start something totally radically new and different. Like, this is the point in my life where I can take a real big risk like that. But I've got 5 years to make it pay off because I got, 4 kids to put through college. So we got to figure this out in some kind of time window. But I feel like there was kind of that almost just uniqueness of the timing in your life that this also fit right with. But what got you excited about this being something that you now have done for, quite some time post that decision?
I mean, it does come down to the starting point is where you started. All right. Little grace of God, little luck, little skill. I had a great run and great mentors where I worked previously. They took care of me financially. My former boss, John Canis, and Dan Healy, my CEO and CFO at North Fork, really took care of their core group of managers. That made me financially secure in taking a big risk. And you hit it on the head. Right? The selling point wasn't the founders. That was part of it. But the selling point was the age of my children and where I was in life. And you put it all together, and it was a unique opportunity that I was willing to take at that point. What keeps me excited is simple. It was always challenging. I mean, it's that simple. It was a challenge before we formed the bank. It was a challenge the day we formed the bank. It was a huge uphill battle in 2007 and 2008 during the mortgage crisis, where, trust was out the window with bankers, and that's all banking is a game of trust. Your clients have to trust you, especially on the commercial banking side. It's absolutely a trust proposition, especially with lawyers, because they're not even trusting you with their money. They're trusting you with your client, with their client's money. But wildly challenging, wildly interesting, wildly different. And, the excitement's always been there and will always be there. And, as my old boss used to say, when, we're not kicking ass and posting good returns, and, our investors aren't happy, or our clients aren't happy, or we're not happy, then maybe it's time to stop. But, all those things are still firing on all cylinders. So it really comes down to one word: challenging, which is, and not easy, which makes it fun to come here every day.
Well, and that, leads me to one of the things that you were talking about when we were kind of crafting your introduction. Is you were talking about how, you learn at the worst of times too, right? So the mortgage crisis taught you a ton. What are some of the things that you've learned through the hard times that you kind of apply to the good times to try and keep you from going to the next hard times?
Sure. Back in the late 80s and early 90s, we had a national commercial real estate crisis that ran from, California down through Texas and back up the East Coast. That was when I was at KPMG in the financial institutions group. So I saw the FDIC through the RTC, Resolution Trust Company, seize not only a lot of banks, but seized a lot of our clients at KPMG. And I saw the infancy of, for me, what was M&A transactions, or seizure and sales, both, not either or. So that was a tough time. That was 5 years of a struggle, certainly for most institutions out there, because I don't think anyone was left unaffected. That's one. The growth at My former bank, North Fork Bank, was incredible. When I say that, your day job was to run your area and run your department. It was the finance and accounting area that myself and my dear friend were kind of, I don't want to say in charge of, but overseeing for the CFO of the company. And your nighttime job, as I like to kid around, was vetting potential M&A transactions. And we probably looked at several hundred to get to several dozen, upwards of 50 or 60, where we either made an investment in or did some level of diligence on, to close on 14 of them for about $30 billion worth of growth, which included beginning to end. It included from the investment banking work on the front end all the way through system conversions and cleanup on the back end and everything in the middle. So couple that day and night job that we didn't have separate teams, and that was wildly challenging. The mortgage crisis in 07 was another one, and the liquidity crisis we just had. But the bottom line is what I said to you earlier, and you just repeated back to me. I honestly believe that the worst of times are the best of times to learn, pick the M&A. If we weren't acquisitive at my former bank, I would know very little about retail, lending ops, retail ops, operations, wires, ACH, I could go on and on, growing banks, traditionally, non-traditionally, adding verticals. I mean, it was a 14-year grad school education that someone paid me to attend every day. So that's a great example of diversifying your experience, across the entire industry with a person who was focused on the client first and not the bank first, and that being my former boss.
Yeah, I think that is it's one of those things that I think if you've gone through and you've kind of taken some of those lessons, it feels pretty easy to look back on and say, oh yeah, that's the right way to approach that. But man, is it hard going into it, right? And, especially, if you're somebody early on in your career, man, I can't think of much better advice than just being open and receptive to when challenging times come. Just being there, digging in and getting work done, because that is, to your point, like that is where you learn. All of a sudden, having to take up something that's not on your job description is a good thing. That's what's going to make you more well-rounded. It's going to make you more prepared for the next thing. And if you're always sitting there just trying to chase a promotion or trying to chase that next buck versus just trying to chase that next opportunity to lend a hand and get a skill, I think you're probably a lot more likely to be successful with the latter than the former. That's just my take.
My former bosses always, it's a negative. It's not really negative. People hear it as a negative. It's a negative way to say it, but it's a very positive. They gave us a tremendous amount of runway to fail. What does that mean? They gave us a lot of room to take on new things and new experiences and fail at them and learn from them and become a lot wiser, right? Smart is one thing. I may not be the smartest guy. I don't think I am. But at the end of the day, maybe I'm a little bit wiser because I was willing to gravitate towards the things that made me uncomfortable, rather than just stick with the things that make me comfortable. And listen, if you want to be a good manager at any level, you should always leave the things that you find easy or rote or that are things that you've done time and time again. You should be looking to leave those behind, grow the people that work for you in those roles, and challenge yourself for the next role and allow yourself to fail. Because if you don't, then you're probably not really challenging yourself.
Man, I couldn't agree more. That leads me to a really interesting point of one of the things I wanted to talk to you about today, though, actually, is I feel like that conversation comes up a lot on the podcast, this kind of ability to fail. And the banking industry is a really interesting one when you start to apply that kind of mentality to it, right? Because at the end of the day, there are some things that we simply cannot fail on. Or, we can fail at anything, right? But if we do, they're catastrophic. versus there are some things that we can fail on. We can all have a good laugh about it, say we learned something from it, and, Bob's your uncle, you're on your way. And, you start to layer in things like, hey, we're talking about people's real money. You were talking about even within your customer base, it's not even your customer's money, it's your customer's money.
Yeah.
And then we're talking about regulation. We're talking about the trust factor. If you break the trust factor, you can break that in a day and it takes decades to rebuild. Hashtag Wells Fargo. But how do you then look at the ability to have lots of runway to fail within your business so that does actually become a positive thing for your bank versus just a challenge or, a fear to your regulators maybe?
Listen, we said banking's a game of trust. So are people you hire and managers. So again, building the bank from nothing and having the experience of building a franchise from $1.5 billion to 60 billion, unlike KPMG, which was I'm old enough to remember Big 8, and now I think it's Big 4. Who the hell knows how many are left? But really, when you bring in what you believe are good and talented people, good managers, I'll use myself for an example, whether I am or not. Good managers are going to work very closely with those managers. Pick one. I'll pick one. I hired my CTO, right? My CTO, Marty Korn, came from Oppenheimer and Bank of America and Credit Suisse. Great background. His biggest concern when we interviewed, which wasn't even an interview, it was more of a discussion like we're having, was, you know what, I really liked him. I really thought he was the right person. And his biggest concern was, I'm not a banker. And I said, that's what I love most about you. You're not a banker. How long now does it take him and I to develop that trust with one another to then be able to say, hey, you know what, I'm not crazy. He is not only talented, he's a good manager of people, and he's good at his job. So it takes time to develop that level of confidence, which turns into trust and, God willing, friendship, which it has. And then you can let go of the reins. But I think, the trick, even when you let go of the reins, is stay involved in what's going on strategically and tactically, right? Strategy is one thing. But tactically, how are we going to attack it? Stay involved up front. Spot yourself along the way. If you have people that you trust, they're going to come to you with problems and concerns and issues. If they're really good, they're going to come to you with problems and concerns and issues and one or two, usually at least two solutions to have a discussion. And, knock on wood again, if you do it right, the big things you don't fail at the big critical items because you're involved enough and have people around you that you trust that are going to manage back to you. That at the end of the day, God willing, the major items don't blow up in your face because you're involved in them along the way. But, again, I saw that with my family's business personally. I saw that with a managing partner at KPMG who stayed involved, believe it or not. Yeah, I certainly saw that at my former bank with my former CEO. So these are lessons I learned over my career from some really good people along the way who have become friends. And, giving people the latitude to fail, to your point, you don't need to give them the latitude to fail at something that hurts the company. If it hurts management, if it hurts process and administration, and God forbid, maybe it hurts certain employees. I don't mean personally, but professionally for a temporary moment in time. It's probably okay. The last is probably the one you don't want to happen. But to your point, Josh, you don't want it hurting your institution, your relationship with your investors or board members. God forbid, your clients. God forbid. Those are the things you need to stay involved in, and size doesn't matter. As you keep growing, you can stay involved if you run a bank that has a very flat management group, that when decisions need to be made, The vice president doesn't need to go to the SVP, to go to the department head, to go to the other department head, to wind up on the other side of the umbrella or the pyramid, to go right down. If it's a flat management group, then that VP will get their ass out of their chair and go talk to even the department head in the other department. And quite honestly, if they can't resolve what they need to resolve, there's always somebody who's going to make the decision right up to myself.
Yeah, it's one of those statements that I think is so interesting to me personally, as as just I gain more experience in my professional life, seeing more ways that companies operate and being a part of incredibly process driven hierarchical organizations versus very flat organizations. I mean, look, right, wrong, or indifferent, each company picks its own path. They have their pluses and minuses. I can tell you for me personally, I mean, just being a part of an organization that runs flat is so much more fun because you actually get stuff done, right? And to your point, the VP just gets their ass up out of their chair and just does the work, right? It's not, I'm here to oversee the work, right? I sit up in some ivory tower on a pedestal and I don't actually do work. No, just across the board, we do work, we make decisions, we trust each other along that line. And I know that, hey, if Andrew makes a decision, you know what? He may get it wrong, but I trust the man, and I trust that he made that decision with the best information he had available at the time, with the best experiences he had in his back pocket. And he made that choice based on what he thought was going to be best for our organization, our customers, etc. Right? And if you fundamentally believe that and you have that level of trust, I think it creates a very different conversation when you do fail. Right? It's not, oh, there's Andrew the moron failing again, or goodness, I can't believe we let that guy do that. Why is he even in a position of power? Or he didn't check with me first, or those kinds of things. Those all fall away. Right? And it's okay, cool. Well, you know what? That's awesome that he ran with it. What did we learn from it? Because a really smart guy made what he thought was the smartest decision and it didn't work out. So what do we learn? Where do we go from here? And how do we all pitch in to help? I just feel like that's a very different type of organization that moves at a very different pace. But for whatever reason, a lot of times we human it and we screw it all up. I don't know. We put a lot of these processes in place.
You know what? Running a company is kind of like raising a family, right? You're not going to hand over the reins of raising your kids to some third party for the most part. You're going to stay involved. You're going to give them a lot of love, but a lot of tough love. You're always going to redirect them. At some point, you got to clip their wings when they're, out of elementary school and give them some independence, even though they're probably, stupid about what decisions they're going to make, but you let them make stupid decisions and make mistakes. And at the end of the day, God willing, they wind up to be good people.
Yeah.
It's kind of the same, man. There's a lot of parallels between, families. I'm fortunate. I come from a very large family, 7 siblings, including me. 4 is not a small number, raising 4 kids that are about 18 months apart. So there are a lot of similarities, but you hit it on the head. You don't need people to come in and keep the lights on. You don't need people to come in and say, well, we're following policies and procedures. Well, that's what the policy says. You don't need people that are unwilling to make decisions and constantly go in their manager's office or in my office and say, here's the problem, what do you want to do? Well, you know what? You don't need order takers. You don't need people who, like a waiter, are going to take orders and then carry those orders around and carry the dirty water around. But that's why, listen, we're an odd duck. The company itself is a very odd duck. We're very different and unique. It takes time to get acclimated to how we do things. Well, it takes time to get acclimated to who we are and what we do, and then how we do things. And then it takes time to kind of get comfortable and fit into the culture, which the culture is pretty damn simple. Communicate, collaborate across company lines, get off your chair, stop sending emails. The email doesn't matter. Go have a discussion with somebody. And at the end of the day, when you hire new people here, especially at the officer level and above, it's usually 15 months to 24 months of runway that I know I'm willing to give somebody to make mistakes and learn how to plug in here, because again, very odd duck and very different culture and demanding, which doesn't bother me to say at all. It's a demanding place to work, and that's part and parcel why, our clients are happy and our performance is so good.
You gave me a couple of things I want to touch on from you, if you don't mind. One of them, just what you ended with, that kind of demanding culture. I feel like that's something else that I've had kind of a different perspective on as I've gotten more experience in life. And a demanding culture where it's kind of what we were talking about earlier, right? Like the negative side of a very hierarchical organization, where it's like kind of commandments passed down onto thou, but not unto thee. That's really difficult for people to get, on board with me demanding and saying, well, you've got to put in the time this weekend to get it done, or I need you to do this to this level. But when you build kind of an organization where it's very much so that team approach, where it's, I know the person to the left of me and the person to the right of me is working just as hard, and they're demanding more of themselves than I could ever demand of them personally. And you start to build that level of trust. To your point, it takes people a while to get into that culture. But I think it then creates the right type of culture where the right types of people stick around, and quite frankly, the wrong types of people don't. And what you end up with is a culture who actually really aligns to that. Like, no, I'm genuinely very passionate about having a demanding organization because I hold myself accountable to those standards. And I'm glad that as an organization, we've decided that everybody is going to be at those same standards. And I'm not sitting here working my butt off while, Susan and Tim are over here just, playing on their phones on the couch and making sure they milk every last minute out of the break, right? I think it creates a different organization. And that goes back to what you were talking about. Just then you have the ability to have a team where you're like, hey, I can trust that they're going to make the right decisions. So the types of things they're going to fail fast on are going to be the things where there's a huge upside and a low, risk versus a huge risk for a very low upside.
Agree. And listen, don't, my advice to anybody is don't ask anybody to do what you're not willing to do. If you're not willing to work hard, then why the hell are you preaching working hard? Don't do as I say, not as I do type crap. That doesn't work. That doesn't work. At the end of the day, the higher you are up in the organization, the more you're there to support the people that work for you. Period, end story. And that's not me. Yes, that's me, obviously. Put that aside, right? If you're going to pick a common area at every bank. If you're going to run the lending division and you're going to be the chief lending officer, then your primary role is to support the people in the lending department and the clients and resolve conflicts or problems or client concerns and consistently morph and change the department in the direction that hopefully you can take it for the benefit of the clients and the client's needs, right? I mean, take policy. Policy is a living, breathing thing. It's not a 10 commandment, right? It's not one of the 10. So the policy is written at a point in time to fit the needs that we think the institution and the clients have, that the clients are definitively going to dictate change to that policy. And if you're not at the top supporting those needs and wants of your clients and your employees, then you're keeping the lights on and you're at the wrong place. But work somewhere where there's standard products in the industry that every bank and non-bank offers, and probably at that point you're competing on either terms or technology or both, right? Take mortgages, for instance. You're competing on terms and technology. But quite honestly, if the large mortgage providers out there that have the best technology that are non-bank, quite honestly, if they're not offering really competitive terms, I don't care how good their technology is. I'll go fill out paperwork to get my mortgage if I get much better terms rather than sitting at
Hell yeah. Somebody tells me Rocket Mortgage takes 2 minutes to fill out and I'm going to be 7%, or the community bank down the street wants me to spend 4 days signing manual paperwork for 2%, you best believe my butt will be sitting at that community bank branch for 4 days.
Exactly. Why not? Why not,
Yeah.
right? You're going to live with that mortgage for 5, 10, 15, 20, up to 30 years. Why the
Yeah.
hell wouldn't it spend the time?
Yeah.
So, technology is great, and it's a great, catalyst for strong growth, without a doubt. Without a doubt, it is. But, if you're not matching technology with true client service, which is human interaction between, in our view, or for our model, that commercial client on one end that has unique needs and wants, and the banker on the other end. If you're not matching those two together, you can have the best technology in the world, and the greatest sales process, and when it comes time to have a conversation, if that conversation fails, because it's inevitably you're going to have a conversation, and those people fail at that conversation, you're not going to have a client. It's not going to happen.
I'm glad you brought up that point. I think that is an interesting point for this podcast, right? I mean, it's called the Digital Banking Podcast. I work for a digital banking company. If I was being self-serving, I'd tell you that digital was the only thing that mattered. But it's not. It really isn't. It is absolutely an enabler, right? And don't get me wrong. I mean, for a lot of institutions, obviously for you all, right? It is the single biggest and only face of your brand, right?
Yep.
It's the only branch that your customers can go to. So it's a huge piece of that. But at the end of the day, it has to be balanced, right? Like, you've got to have the technology to bring your speciality forward and front and center, and your culture and your brand and your value proposition to your customers. And you need the technology to be able to do that. But if this stuff in the back sucks, the technology is not going to make up for that. And so it really is it's pieces of the puzzle. And I think, so that brings me to one of the things I really wanted to spend some time talking with you about, which is that kind of unique strategy for your bank, right? And you've talked about it a few times, how you're really focused on a niche that very, very few people are actually solving for. And I can definitely probably put these words in your mouth, right? You're not saying that every bank should start doing exactly what you're doing, because that's actually
They can.
Exact. Well,
But competition's a good thing. I don't mind competition.
No, but hear me out. Hear me out. I think what the point I'm trying to make is that you're not saying that everybody should come and do what you're doing in the sense of exactly the products and services you're doing. But I feel like you're trying to tell people you need to be doing what I'm doing, which is looking for things that are different and looking for things that are niche and are unique and special. Because once we get to the point where so many things are commoditized, which, again, this is kind of what we started a little bit of the conversation around. Like, I feel like we need to have some of these uncomfortable conversations. And I'm going to give you an example of one here in a minute and get your take on it. But if we're just competing on rates and technology, how many places can I go get a checking account? It's a lot of places.
4,000 plus banks in the country, because, as you know, non-banks will provide you with checking accounts because banks are standing behind them.
Yeah. So I got a lot of options. And when the differentiators are pretty small, it's, okay, what are the things that you do around kind of those core services, right? To your point, like for you guys being able to get deposits, hey, we're trying to do this other stuff. That just kind of comes with it. How do we build products and services that say, hey, we're not just going to be relegated to doing what we've always done, because that is getting so commoditized. It's getting so incredibly just operationalized and transactional through technology, which, again, park this to the side, but keep it in the back of your mind. I mean, from my perspective, that's a good thing, right? Like, humans, I don't want to waste my time doing banking. No offense. Like, I don't want to spend time in digital banking. I don't want to be doing my banking. I don't want to be chasing my toddler around the park, right? That's what I want to do. Yeah. I have to do my banking needs. So yes, if we can make a lot of those kind of quote unquote transactional things very operationally efficient, then, but again, that's condensing your ability for differentiation. When everybody says, I can help you do the common things you do with your finances in a month, all within 2 minutes digitally, when everybody does that and says we all offer a checking account, a savings account, and a credit card, and a loan for your car and a loan for your house, what are you competing on? So I guess, again, sorry, long-winded way of getting to, I think what you're trying to tell folks is that you got to start thinking outside the box, and we have to think less traditional.
And I would agree. So typically, not always, the more consumer focused, the more commoditized, the more technology beginning to end, soup to nuts works. So for you, Josh, for a checking account, you shouldn't have to leave your seat at home after hours to open up a bank account and immediately get approved and get service. No different than you with a mortgage, which can be a little bit more cumbersome, but still a good example. Probably a better one is a credit card application, right? Mm-hmm. You should be able to get a credit card in X amount of minutes as long as you're credit worthy and be approved, and that's it. Be done and go back to eating dinner or watching TV. The more commercial things are, the more humans, really good people, need to be involved in it. But technology is the driver without a doubt. Use a commoditized platform, an investment brokerage account. If you want real service, and I'm a career banker, so I know what I want. I want real service. I want to get real feedback from somebody. Well, then finding a really good banker at a Morgan Stanley or a Chase or wherever you're going to go, it doesn't matter. Might be difficult. Or if you just want to trade, then go open up a TD Bank, type electronic brokerage account and go trade. But at the end of the day, if you're not, and I still honestly believe that the old-fashioned type community banking outside the major metropolitan areas is still a great service. If you're upstate in New York in the Catskills or up at Lake Placid, the needs of those communities might be unique where, guess what? That community bank and those facilities they may have around that area, along with technology, is a great service. But if you're going to be in the major metropolitan areas and you're not going to focus on either something unique and different or something that you can do in a unique or different way, and you're not going to couple that with technology and people, I don't know what you're doing. And at the end of the day, I'm not the only one. There's a bank out there called Triumph that's been designed for the trucking industry. Personally, I think they do a great job from everything I see and read. And their CEO, Aaron, is, and I'm sure the whole management group is laser focused on that vertical and what they can do well, which is tremendous. Live Oak down in North Carolina, SBA shop. You'd say, well, SBAs are typical. Not the way they do it. When they first started the platform, they focused on, I think it was the veterinarian industry and hired experts in the vet industry. And then did that well nationally with technology and the like. So I don't know if it has to be something that we found like litigation where it was just completely underserved. Because payments isn't underserved. I mean, it might be 125 banks, but it's not underserved. Right? Everybody at this point, I can't think of a business that doesn't take a debit and credit card, no matter how small. No matter how small, I can't think of a business that doesn't take a debit or credit card, which we all know if there was adoption to happen, it all happened during the COVID phase that we went through. But there's another one. So that's a very commoditized industry. So not a lot of banks in it, but very commoditized. So, how can you be different in it? How are we different? It's not technology in that one, although it is on the back office side, but we're not marketing on the front end. So it's back office technology that really streamlines our processing, which is great for our customers. It gets them their money quicker. But at the end of the day, what's the real service we're providing? When someone picks up a phone, they get a human body from Esquire, and within the same phone call, we'll get a decision maker on the phone right up to the person who runs the area, my COO, Eric Bader, or myself. And they'll get a decision. Even if they don't like it, they'll get a decision. So, the technology is crucial because without it, you're being left in the dust, quite honestly.
Yeah.
But coupling that with good people on the banking side, and it doesn't have to be private bankers, it doesn't have to be relationship managers, it doesn't have to be business development officers. Some of my best people are sitting in the wire room right behind me, and they'll spend more time dealing with our clients than the business development people on the front end.
When you were talking, one of the other things that I was thinking about is not only is kind of how you have to think about your business changing, as a lot of what we've talked about of the commoditization of some of the different products and services happens, the world around us is also changing. And it's really interesting to see how we as an industry have looked at that change. So I'll give you a sneak peek. I have a guest that I recently had the discovery call with. We're booked to record here, I think in like a month or two. But I remember it was one of those, I can't even remember how it came into my inbox. And I almost deleted it as spam because it seemed a little kind of like wonky. And then I looked into it and I was like, there might be something here. And I get on the phone with this guy and I was like, oh my gosh, this is a topic I want to talk about. It's totally like out to left field. But I want to say, where was he calling in from? Dubai or one of the like UAE countries. So he is one of the founders of a company that is focused on niche loan products for people in the like online content and streaming space. And he was talking to me about it, and he started giving me examples, and this is where I was like, oh my gosh, yeah, I've never thought about this because it's just not in my daily purview. But he was like, think about it this way. There's a kid out there, we'll say they're 18, right? But they're far younger ones too. But let's say we have an 18-year-old kid who plays video games from home, which as parents, we told all our kids, like, don't ever do that. It's completely useless, right? And he's playing video games on Twitch, and somebody pays him $30,000. One time, 30 grand, just to watch him play a video game, right? That kid now goes to a financial institution and says, I'd like a loan for a house. And they're like, screw you, dude. Like, no way, right? Your income is so unpredictable. It's not a real job. And no one pays you $30,000 to watch you play a video game. And they're sitting there going, no, actually, that was a small tip. I've had somebody pay me $50,000, $100,000. Yep. Like, that's real. That's really happening.
It absolutely is.
And so our world is changing so much around us. And instead of saying, that's not happening or that's not how we do it, that should be a huge green light to us of that's a new opportunity. And that's a space. I'm using that one as one specific example, but I'm just saying kind of, wholly, we should be looking for those types of examples to say, great, well, I'm going to keep doing my checking, savings, credit cards, auto loans the way I've always done them. But I'm going to look for other areas where I can, set myself up as somebody who understands a very specific market and has a very specific need. Again, to your point, right? Like your litigation lawyers, that's a very specific market. So going to them and saying, hi, I'm a bank and I offer banking services. They're like, good for you. But if you go in and you're like, hey, I'm a bank who serves you and I understand you and I can speak your lingo. And I know what challenges you face when you've got, a litigation that's going to be 3 years out and all of the nuances that go, I understand that. I actually know what you're talking about. So when you tell me, hey, this is where we're at in this, I go, yeah, that makes sense to me. As opposed to, nope, sorry, that's foreign, right?
And that's your warm open door, right? If there's, pick a number, 100,000 law firms in the country, because that's what our data tells us, just over 100,000 of all different walks in life, not just plaintiff. There's not a law firm out there that doesn't have a banking relationship. They all have to have, at a minimum, a checking account. At a minimum, right? They need to pay their bills. You start a business, right? I started a business from zero. What's the first thing we did? Pay our bills and pay our employees. The first thing we did was not bring in client number one and make revenue. First thing we did was pay. Yeah, I wish, right? But at the end of the day, every business is going to have some sort of banking relationship. So what's going to make you different? And, we didn't just create this out of thin air. We did, before we created the bank, what we do today and we will continue to do tomorrow. Shut our goddamn mouth, listen to our clients, to their wants and needs. Maybe we can't fulfill every one of them, but how do we design what the banking industry calls products and services, which is really, banks sell two things on the loan side and two things on the deposit side. They sell term loans and lines of credit on the lending side, and they sell transactions accounts and time accounts on the core banking side. I'm not talking about investment banking or, insurance services. So we don't necessarily create products per se. We find solutions for client needs. And in some cases, as we're talking about, sometimes solutions are just expediting the needs. I'm a consumer. I want to sit at my dinner table and I want to open up a checking account. Interestingly enough, the lessons we're learning from the litigation side probably are good potential solutions on the payment side. And without a doubt, the payment side is good solutions for any vertical and any business model, because payments are what drive the world. And at the end of the day, that's what we do as bankers, right? No, you don't. You originate loans. Well, what do I do the day after I originate a loan? I process payments. Now, you open up checking and money market accounts and depository accounts. What do I do the second after I open that up? Now you open up investment brokerage accounts. What do we do? In every instance, at some point, you're clearing transactions, right? So the payment vertical is always something that is visible across all these verticals, but listening, like I said, shutting your mouth and listening to your clients, or better yet, your prospective clients, is the best solution that's out there. And, somebody like the guys down at Live Oak are continuing to literally kick ass on their platform because they listen and move on to the next thing. And, they're doing a great job down there on a product, SBA, that, any bank can do.
Yeah.
How are they doing it? Well, they're shutting their mouth and listening.
I actually had to pull up. I went back and looked at my notes from the first time you and I talked, Andrew, because I remember you'd said something and I couldn't remember kind of how you said it. But in my notes, I put that you were talking about how a lot of times we use this example in a lot of ways, but we're a hammer looking for a nail. But how do you define success? And ultimately, you as a financial institution need to understand that. If you don't understand kind of how do you define success, then you're just going to be a hammer running around looking for nails. And especially as kind of we were talking about, the world is changing, right? If our definition of success is that we do what we've always done, the way we do it, and we do it well, you will only be successful for a finite time. I'm sorry to say it, right? Yeah. But things change. And it's just, what's the time horizon that it's going to be? Yeah, maybe that would be a couple 100 years. And maybe it will be someone else's problem. Sure. Or it may be tomorrow, right? It may be tomorrow's problem, and maybe your problem. And so as we look at things like, again, just using, your example or the example of, the gamer kid playing Twitch and getting paid, we can either say, well, I don't understand that, so I'm just not going to deal with it, or it's not real, or it's not happening, or it's not even that special or different, and I'm just going to keep doing my traditional products and services. Or we can understand, like, what does success look like for us? Well, success, obviously, for you and Esquire Bank looks like, no, we're going to look at our very specific customer base. We're going to ask them what does success look like for them. And then we will mold ourselves around creating, products and services that will help them get that success. And then, funny enough, that's made you pretty successful.
And it's true. And at the end of the day, the technology we invested in over the last 5-6 years, maybe even a little longer, we don't need to have, a custom CRM that we built. We don't need to go out and first acquire data, but that gets you nowhere in the litigation space because you have to enrich that data. And when I say enrich it on a daily basis, and the best data to enrich it is on the lawyer's website. Well, that's pretty tough to get that data off their website. It's not like you're getting it from D&B or Zoom Info. That's where you start. And investing then in, a digital marketing cloud and investing in content and AI. And you and I could be sitting here talking about a high-performing bank. That grows a lot because we are, listen, we're $1.7 billion, $1.8 billion. I could run around and hire a bunch of people and do it, as you've heard me say, with bubble gums and Band-Aids and shaking hands and kissing babies. Not a problem. It can continue to get done. And at some point, you got to make a decision to say, well, let's invest now for the future. And when we say the future, we don't mean a year from now. We're investing now for when we purchased the CRM platform from Salesforce. The goal was to be where we are today in 5 years. Thank God we're pretty damn close. I missed the window by a little bit, but that was the goal. It doesn't mean that that's again, grace of God, luck, and some skill we got there. And, you meander your way there with the goal in mind. But we didn't have to do that. We didn't even really need to do that at that point. But we made a decision, a very thoughtful one, to invest in a technology platform that we knew we'd have to stage, right? Let's get the CRM, let's get the data, let's enrich the data, which never stops. So let's always do that. Let's enrich the data. Let's invest in a digital marketing cloud. Let's couple that all together. Let's start to create content. The content is basic. Now the content becomes what we call thought leadership, which is very simple. Hey, we understand your business. Look at our content. Yeah. How can we not? Right? It's a simple way of saying it. And now, let's start morphing into AI. Why? Because if Josh goes out to Amazon, I'll use Kyle's example, and goes looking for fishing gear. Well, you want fishing gear being pushed out to Josh continuously from Amazon if that's his hobby, right? He's out there looking for it, so have the AI content generator push it to him. So now let's morph to AI, and all these things don't produce the immediate result. They're all investing today for what should and probably will happen in the future. And I get the question all the time from our investors. Your efficiency ratio is excellent. Could it be better? And my answer is simple. Sure, it could be better. It could be a lot better. You want me to stop investing in the future of the company? Does that make sense? Sure, I'll have a couple of years, God willing, worth of good returns, and then you'll wonder why, something is dropping off from a performance perspective. And I'll say, well, we stopped investing in the future, which is the dumbest thing ever, would never happen. I love my investors, but they're not running the company. But that's a perfect example of we don't have to, we don't even probably need to when we did it. But we better stay in front of the curve because that's the way the world is heading. And we got to get ahead of where we need to be now because this stuff takes time.
Yeah. It's a lot harder to catch up than to stay in the pack. That's other point about that too, though, is that, for you, it is about kind of continually doing that investing in the future. And you've kind of alluded to this a few times that it's, there's no such thing as like the project is over. We're done. Nope. We did the thing, like check mark the box.
When it's over, when I'm dead, I get fired or I resign.
Yeah. You could do this huge 5-year Salesforce project and then in a couple of years realize, hey, you know what? That was the right decision in the moment. And that was the right tool in the moment. And now it's not.
And we didn't know it was the right decision.
We're doing it again.
And we didn't know. The CTO, Marty, and myself, and my COO, Eric Bader, we sat around and talked about it and went back and forth on decisions that for systems that needed to sit above the core and what those decisions were. And more importantly, where are we going? What do we want to do? Where do we want to be? What is our clientele looking for? And, what's the long term? If anyone tells you what's the 10-year plan, my answer is they're full of shit. What's your 5-year plan? Maybe. When you start thinking longer than that, I'm not sure that anyone knows what their plan is 7 and 10 years out. But we made a strategic decision to invest in a Salesforce-based platform. And whether Salesforce was right or not, and it was, but whether it was right or not, it was the right decision to make, to invest in this type of technology platform, because the brand awareness at a minimum, the brand awareness today is marketably better in the litigation vertical than it was 2 years ago. Forget 5 years ago, 7 years ago. 2 years ago, we are head and shoulders above where we were back then. And we know it because we hear it. We're aware of you. We don't have to see you. You don't have to talk to us about it. We're aware of your content out there in the market. Maybe we're killing them with it. Maybe we're not. Maybe it's a little much. Maybe it's not enough. It's definitely a lot. Definitely a lot out there in the market. And people like fintechs and people who provide banking as a service type services and other technology providers away from your core. And in our world, non-bank finance companies that will finance deals different than us, they are all business partners. And when you see them as competition, you're actually, probably being defeated before you even get started, because they're not competition. They're business partners.
That kind of sets me up to one of the other things that I'd be remiss if I didn't ask you your thoughts on. Given your experience, what do you think of kind of the state of M&A activity these days?
Oh, it's going to heat up. When you have banks, unfortunately, out there that are trading where they're trading, and just use book value as an example or as a metric. If generally people are trading around 1, obviously some people below, obviously some people above, and whether they deserve it or not, it's probably lower than it should be because of the state of the market. And you can blame it on interest rates, but there's a multitude of reasons why. And then you couple that with, what your investors want or demand, which is growth and performance, and you couple that with technology and where people are, there's, no doubt in my mind, and probably the entire investment banking community's mind, that, the end of this year and certainly next year is probably, not even probably, I'm pretty sure M&A activity is going to heat up. We're trading at 2.3, 2.2 of book. Who cares? It doesn't matter to me. All I can do is perform. The market's got to decide what they think we're worth. I know what we're worth, which is more than 2.3. That's an easy one. But, if I'm trading above 2 and someone's trading closer to 1 and they want to sell their company because nobody buys anything, people sell things, and they want to sell out of their company because of whatever reason, then on paper, those deals are going to work always. And I don't use that word lightly, Josh. Those deals on paper are going to work always. So it's a matter of, is it the right fit strategically, geographically, product and service wise, blah, blah, blah. So, but at the end of the day, if we model a comparable size institution out there and the difference in the multiple is that great, 100 out of 100 times it's going to model excellent. So it's not a matter of if, it's a matter of A, do they want to sell? Because we can't buy them unless they want to sell. And B, is it the right, use one phrase, strategic fit for a multitude of reasons? That's out there in the environment. Things haven't normalized yet with this hyper increase in rates and where they are today. So, banks are still getting punished more than they should. Maybe others are getting rewarded. I don't think the ones that are rewarded are being rewarded more than they should. I actually think they're getting dragged down a little bit by, the poor performing institutions. But that's a ripe environment for M&A.
Yeah. The reason I bring that up is one, you've had some, significant experience in that space, but, we were talking about kind of having some of the uncomfortable conversations. So we hired, a while ago now, a gentleman, Ken, onto our marketing team for a lot of our thought leadership content. And he's a former American Banker writer. And the reason that we really wanted Ken was we wanted to almost park him on his own island and let him just report. Like, again, he is the stereotype, like, I want that gritty, quintessential, like, New Yorker reporter who's like going to fight the story to the death to find the real truth of it and won't let anyone influence what he writes. Like, it's going to be what it's going to be, right? There's no like hidden agenda behind it. We wanted that. Like, I wanted somebody to really write that way. And so Ken has been doing a lot of different just industry article pieces recently. And he released one not too long ago that sparked a little LinkedIn debate. And yes, the title of that one was a little bit more clickbaity than usual. And it was focused more on the credit union space, Andrew. But it was basically, there's no joy for credit unions under 10 billion in assets. And he was interviewing, this wasn't his opinion, right? It was an interview with an M&A expert who, for some contractual reasons, had to stay anonymous. And I think that kind of compounded this whole story, like getting some feathers ruffled, right? And basically the gist of the story was, look, like, it's challenging to be a credit union under 10 billion in assets, and therefore we are seeing a significant increase in M&A. Those are just facts, plain and simple. This is not the touchy-feely side of things. These are just the straight facts, right? And so it started this whole debate of like, they're saying there's no love and no joy. And no, that's not it at all. I'm not saying you can't be having a lot of joy as an institution under 10 billion. As you pointed out, right? Sometimes like the best learning and the most fun you can have is in the challenging times. So there's absolutely joy. Yeah. This is a challenging environment. And to your point, for whatever reason, right? You may be having all the love in the world, fighting really hard to keep your 300 million in asset size credit union kicking ass, taking names, doing the things you set out to do. And there may be $1 billion credit union down the street whose CEO is just done, doesn't want a succession plan. The business isn't doing great, but it's just kind of chugging along. And they see a credit union that's a little bit larger or similar size that is looking to grow through M&A. And to your point, a lot of times on paper, you're like, yep, I hate to break it to you, but this thing pencils, the maths, like, we're doing this deal. Right. And so I think we are seeing a lot of that. And my point of the comment is, it is about us trying to find exactly this whole conversation we've had, right? Like, what are the things that we can do different? How can we support through all the pieces of the puzzle, like technology, making it so that institutions like you at 1.7, 1.8 billion are having a ton of fun. And there's a lot of joy in it. And yeah, I think you would probably echo the sentiment that there's probably some days that there isn't a ton because you're having to work really hard to fight for it, right? Yeah. But you know that you're making an impact, and you're able to at your size because you're intelligent about how you do it.
Yeah, we are definitely making an impact in the litigation vertical, which doesn't just include the law firms. It includes a lot of businesses that support those law firms, which we have a lot of inroads in, and we do business with them too. So it's not just plaintiff law firms. The payment industry, the same thing. It may be a lot more commoditized, but there's a lot of differentiators built in there. And at the end of the day, if you're not coupling that with technology, and for us in the New York market, some local business here in the New York area, then you're not growing and you're not pumping out good returns. And yeah, if you want to be a credit union or a community bank that services a regional area or some sort of local, what credit unions were founded for, union niche or the like, and you're happy with where you are, and most likely you don't have public investors, because most likely credit unions don't. And your depositors aren't screaming at you who really own the company, which they wouldn't be, then great. Then run your company and service that community, whatever that community is, by definition, and you're off and running. But if and if that works and people are happy, great. I know for us, if there is a lot of needs and wants and a lot of growth potential, then why aren't we doing both? And if my biggest frustration, I'm not concerned. Concern would be always credit and compliance, always. But if my biggest frustration is scalability, you get and see opportunities that you can't, I'll use the word bank, that you can't bank because of who you are and where you are in this cycle in your life, then yeah, that's frustrating. But you know what? That's a good frustration and a motivation to continue to push because, listen, scalability is simple. It's size, which for banks is usually capital, because things like our legal lending limit are governed by capital. If I want to lend more than $30 million, I need more capital. Period, end of story, by regulation. I can't just say, forget the OCC and everybody else. Let's just lend $50 million. That just doesn't happen. So at the end of the day, size and resources, which is people and technology. So size, some people like to say asset. Okay, size, assets, and capital, great. Who cares? It's really capital. And resources are, people and technology. So if my biggest frustration, which it is every day, is being able to scale these business models at a more expedited pace than we are already, which we're already, 5 or 6 times the industry average, growing at 20+% a year. If my frustration is scaling, that's a great frustration because that just comes full circle and feeds the engine for what do we need to do this and how do we need to do this and how do we grow. And listen, M&A makes sense for 2 major reasons. It's scale, problem we're just talking about, and it's diversity, which there's nothing wrong with diversity as you continue to grow, being more diversified.
Yeah, well, and I think it kind of brings you all the way back around to what you were talking about earlier of just how do you define success too, right? So kind of what's your definition for success? What are you looking to get out of the business that you have and the impact that that business makes and the return that that brings by making that impact? And does that all check out?
Happy clients, happy employees, happy investors, right? In that order. If I don't have happy clients, then I'm going to limit my employees, or my employees are going to be pissed off because at the end of the day, if I don't have happy clients, who's going to get the brunt of it? Yeah, I'll get some of it, but my line employees are going to get more of it. So happy clients, happy prospective clients, happy employees, happy investors, happy regulators, without a doubt. But that's kind of the umbrella that covers it all. Because if my regulators aren't content with what we're doing, then none of it
doing it. Yeah.
So they are my ultimate business partner. Why? They're the ones who gave us the charter, and they're the ones who gave us the FDIC insurance. Without 2 of those, we're not doing anything.
Yep.
So they are my business partner without a doubt. But the mission of the bank is simple. There's so much growth, both in size and in, which I always do up and down. So much growth vertically and so much growth horizontally with technology and plugging in different components into things like lending and deposit taking, because there's so much more we can do. There's so much growth potential that the need for technology is just that. It's an absolute need, not a want. And it's not something we think is cool. The need for quality people is without a doubt paramount. And sometimes the way you get there is through M&A. And, my old boss used to say, hey, if we can get somewhere in 5 years and we can shave 2 years off of it or more, but 2 years off because of an M&A transaction, why wouldn't we do that trade? As long as the metrics are right and the deal makes sense.
Yeah. Man, what a great way to kind of sum it up, though. I usually kind of wrap us up, but you kind of did that for me, so I'll leave it at that. But before I let you go, I'd love to ask 2 final questions of you, Andrew. So where do you go to get information about what's happening in the industry?
Sure. Without a doubt, the banking publications, whether it's, the ABA, American Banker, blogs, and the like. Quite honestly, I'm inundated with banking information, mainly because I've been in it so long. So, the name, the email address and all that, and the stupid title that goes along with it drives a lot of email content my way. On the litigation side, there is just as much trade publications out there, without name dropping. There's a publication called Law 360 that's excellent, but there's so many more out there. And on the payment side, it is absolutely like drinking from a fire hose. It's amazing how much payment information is out there and technology. So life's simple. I get to work early. I read in the morning. Take about anywhere from as little as 15 and 20 minutes up to maybe an hour of making sure I stay on top of what's going on. Throughout the day, I'll stay on top of it as best as possible. Obviously, make sure I don't miss anything. Things like the Wall Street Journal and New York Times and the Washington Post are always good. There's nothing wrong with them. But at the end of the day, staying on top of what we do as financial service providers that, embrace technology in unique verticals. I always say to anyone who asks me, I will read a publication like Law 360 as much as I read a publication like The American Banker. They are as important on certain days. One's more important than the other. Because again, how do you make anyone comfortable that you understand their business model if you don't know what's going on in that business model? It makes no sense. And you know what? I care. It means a lot. I have 4 kids. This company, if they're healthy and my wife's healthy, then this company's it's not another child, but it's like another child. We built it from nothing. So I'm passionate about it. I'm very happy and fortunate to be here. And at the end of the day, if we're not going to stay on top of what's going on in the industry and we're not going to always strive to be better tomorrow as compared to yesterday, then quite honestly, what the hell are we doing here?
Yeah, it's definitely obvious that you're passionate, sir. No, I was going to say, because I love that you answered, right away with one of the things that you focus on is actually what are your customers reading, so that you're aware of their industry. I think that's such a big key to that. Yeah. Well, if folks want to connect with you, or if they want to learn a little bit more about the bank and what you're doing there at Esquire, how can they connect with you or learn more about the bank?
Sure. I mean, the website, esquirebank.com, but with me personally, my first and last name with a period in the middle is Andrew.Sagliacker at esqbank.com. They can call. The numbers are out there. We actually pick up the phone. You're not going to get somebody from a foreign country answering the phone from a call center. We actually pick up the phones and talk to our potential anything. So fill in the blank with stakeholders, which pretty much encompasses everything. But specific to the litigation industry, Lawyer IQ's out there, which is powered by us, but a separate website. We sell not a single product or service on that. It is what we call thought leadership, which I know is really content to let people know not only do we understand your industry, but from a business and finance perspective, we think we can be helpful, informative, directionally. We have our website out there, but, people should feel free to email me or call me directly. Like I said, we will pick up the phone and talk to them.
That's awesome. Well, I hope that this doesn't turn into a bunch of sales calls that you end up taking. But
if it does, I'll thank you. If it does, I'll thank you. I promise.
I always warn vendors if they're listening to the podcast and, a bank CEO or credit union CEO is on the podcast and they give out their info. I'm like, it better not come around that you're like cold calling all my podcast guests because they decided to be kind enough to share their information for people to network with them. But no, seriously, Andrew, this has been an absolute blast. I really do appreciate the opportunity to talk to you. It's really cool to see that folks are trying to find, new and unique ways to do something in a very traditional environment. So it's been a blast just to get to know you and learn a little bit more about what you're doing. Thanks for taking the time, and thanks for coming to being a guest on the Digital
Absolutely.
Banking
It was a
Podcast.
lot of fun, Josh, and it was unique and different. It really was. This process with you was very different than the others, and I can't give you a better compliment than that, than telling you it's been a different experience rather than its route like everybody else. So it's been an absolute pleasure. And I said it at the beginning, and I'll say it again. Thank you for taking valuable time from your busy schedule.
Thank you as well. Thanks, Andrew.
All right, Josh. Take care.
Thank you for listening to the Digital Banking Podcast powered by Typhon. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.